So let's look at the yellow metal. And we have kept this chart because of for reference purpose. And this remains the only valid chart that I've seen the market respect. And the reason we didn't want to clean it is in order for us not to miss the inspiration of the market. And when we look critically, we will see that markets have created a strong demand flow at this level and created another demand structure at this level. Then price came back to test, creating another demand flow, and in the process, instituting an ascending trend line and was once again tested before break of structure and a possible retest. And since then, price have not returned to that structure for retest again. So what does this mean is that the buying potential might be heading towards renegotiating on this ascending trend line, and a break above that structure will ultimately return price to where it will give you another strong buy structure. So price must trade above this level for us to see gold in a new all-time high. But however, the price of gold is overpriced. So on technical, now price will continue to trade until it gets to this level and it will sell down. It's selling down not just because it wants to sell down, but it's selling down because of a few things I want to point out. Now let's look at the structure again. This is 4 hours time frame to see what has happened. Now we have a descending trend line breakout in a similar way that BTC respected descending trend line breakout. We have a descending trend line breakout from here, and you can see that price initiated the first touch here, which is 2,721, and the price return here again to retest the structure, before break of structure, and followed by a retest, and finally came yesterday to retest it, the open. And after retesting that structure, now a broken demand floor was again, which was supposed to be a supply roof, was broken. That shows the presence of liquidity. It was only possible because it shows you there's influx of liquidity. There's liquidity push moving um, from one institution to another institution, from one asset to another asset. There is asset transfer of wealth. So what technically means is that more billionaires, more hedge funds, more central banks are moving liquidity into the yellow metal, let's say USD. That's what it means. So at that point, you see technically that price decided to start to respect and all of a sudden broke the structure and returned back to its buying potential. Now, we were not expecting the structure to be broken, but because price came back to retest a broken descending trend line, they picked liquidity from this level and broke the structure. So after breaking the structure, automatically price is set seal. Price is set seal for a higher high. That is what it means. It sets you for a higher high. So we have no choice but to abide by the rule. There is liquidity injection. So you see, we were not expecting price to break the structure, but as long as price has broken the structure, it returns to a buy potential. It returns to a buy potential. So after breaking the structure, I knew that the whole dynamics was about to change. The trade dynamics was about to change. It's not supposed to break the structure because a broken demand floor should be a supply roof for us to have a bearish move, continue sell down. But we have no choice that the price returns on the same demand floor. So if price returns on the same demand floor, then we are ready now to move in the direction of buy. You see, the floor where price is at the moment is a sixth floor. It's a sixth floor. And on this sixth floor, you can see everything that happened on this floor is a buy. Everything on this floor, on this black ascending trend line, acting as a dynamic support, it's a buy. Price returns on it. So if it returns on it, the minimal move, the minimal move price can do at this level has also been broken, which is this, the red ascending trend line. The red ascending trend line is acting as a dynamic resistance to upswing, where we see here price have created double structure. Retest of that double structure have broken. When price return again, you respected it as a supply roof, but ultimately broke the structure, used it as a demand floor. He uses the demand floor and later broke the demand floor, turning into a supply roof, and price have sold. And when price returned, he respected it as a supply roof before break of a supply roof to use as a demand floor. And have also gone on to meet the liquidity area 27, 26, 21, which is where we consider as an institutional sell zone. So for every time price gets to that zone, it always meets a strong rejection to upswing, where price begin to depreciate, indicating that institutions are not willing to buy the yellow metal above $27. They are not willing to buy above 222 and 2,727. 2,727, 2,725, 2,721. That is the highest they can pay for the yellow metal at that level, at that zone. So it becomes a selling zone. So from 2,721 to 2,727, it's the highest price institution can buy the yellow metal at this level. So what we are looking for now is let them establish a new buy agreement. If they establish a new buy agreement, that typically means that they have to break that structure. A break of that structure, we ultimately want to use it as a support. Then we can now look for a higher zone buy, meaning that the SAU can now trade in the zone of 2,758 going into 2,760. So at that level, you begin to look for a sell opportunity. So if this is a new floor, market broke and return to this floor. If we clone the structure, it will ultimately tell you where the buying potential will stop. And the buying potential, according to our strategy, says that price is coming to 2,761, 2,762, 2,766. Set your sell order at this level. This is the next place where you will sell, let's say, USD. This is the next sell zone. This is technically the next sell zone. Now we'll watch how the 4 hours close. The 4 hours close is going to be in about 24 minutes. The market have tapped into a supply zone, 2,727, 2,725. This area institution have refused to buy gold above this price. That's what it means. They can't buy above this price. So until we have a fresh liquidity, which is willing to buy regardless of the peg, then we can only see at that level that retail traders might join in with other institutions who are willing to buy SAU above $27 mark. Then you can now see price move into 760. So at the moment, if price shows a significant retracement by close of 4 hours candle, the next 4 hours candle is going to sell down, indicating institutional rejection to upswing. So what we want to see here is a possible swing into completing this ascending structure, which in the zone of 2,730 might likely trigger as a sell zone because the market is moving in a bullish ascending channel. That bullish ascending channel creating series of higher high. You see. So let's look at it again. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Price might move on here to create a new high, then draw down. This is case one. This is case one. This is case one. Then the next thing the market can do is what I'm going to do now. Price might move this high to this level to complete the higher high, then draw it down to this level as higher low, or might draw everything down as higher low. The reason for this is when you look back, if you look back in time, you will see that market has also created a nice structure. That nice structure at that level, if price returns to this level, at this level, market instituted a 9. Instituted a 9. There is a very high probability that if the market pushes its higher high to this level, it will institute a drastic 9 at this level. It's going to be an institutional drawdown, a heavy institutional drawdown at that level. And that level is indicating 2,761, 2,762 into 63. Set your sell order. Starting from 2,758. From 2,758 into 62, 63. There's going to be a sell reaction on that level. That is what it means. So if this 4 hours candle rejects 2,727, which is already known institutional rejection level, it's an institutional sell level. Institutions are not willing to buy yellow metal above that level. So if 4 hours candle closes rejecting that level, and the next 4 hours candle coming affirming the rejection, it also shows that this time institutions are not willing to still buy above that price. So be it, that's good. That means the market has met its higher high and it does not want to go below. So market now is trying to create a reversal. So for it to create a reversal, we need to see a lower low and a lower high. So if we see lower lows and a lower high, then the market is changing trend. Then we look if we have a descending bearish channel where the price will travel at this time to see if price can take us to 2,600 mark. But at the level, at the moment, at this moment, based on the current bullish impulse I've seen, a break of a demand floor becomes a supply rebel. Price disrespected it, turn it back to a demand floor. It shows that the market might move another 400p. That's what it indicates. So from what we saw yesterday price action, it shows that the market might be creating the new higher high, might be in the zone of 2,761 into 62, 63, 64. But starting from 58, 2,758, it will move into 59, 60, 61, 62, 63, 64, 65, and they will drop it from there. We will reject it from that level. The reason for this trade is very obvious, and we can see it from the price action that there is an ascending trend line where institutions have initiated a sell order. That sell order is on ascending trend line, and for every time price gets there, they sell it out. And we have already confirmed our floor, an institutional buying floor, where at any time price returns, institutions buy. When we clone it, we realize that it matches institutional sell zone. We've got our institutional buy floor. We clone our institutional buy floor to get our institutional sell floor, sell roof. Sorry. So on that roof, you will see price has done a significant rejection to upswing. They are not going to change. The sentiment will not change all of a sudden. It is not going to change because we have seen it. For every time institutions want to do something, collectively they do the same thing. It's a collective market reaction. So when one institution begin to sell, others are going to sell. When other institutions begin to buy, these are money movements. These are big money moves. So what we see for the yellow metal is if price breaks and disrespect the structure and continue to uptrend, it will be a good time. Then we will ultimately see if by completion of this bullish channel, close of 4 hours, market show a considerable rejection, indicating that the structure of the market is the new adopted structure. But if that is broken by any means due to injection of liquidity, then expect the bearish drop to come from 2,761 into 62, 63, 64, but it will start from 58. So set your sell order at 58, 2,758. You will see a market reaction at that level. You will see a market reaction at that level. That's what you see. You can't get anything different from that. You cannot get anything different from that.